Hi friends, Simit here from InformedTrades.com. Today is January 21st, 2014. Time for our daily Forex chart review. This is basically where I review the charts as I see them in the Forex market, looking at the daily chart, looking at about 20-some currency pairs, sharing the trades I placed and the orders I'm placing and what's been going on in my trading. Of course, if you're new to trading and you need an introduction to all of this, check out InformedTrades.com. We have a bunch of free material to help people learn to trade there. So here, okay, first thing I want to start with is the dollar Swiss chart. I got stopped out here. You can see I entered at the black line. My target profit was the green line, and the red line was where I had to stop. Now, one could argue, I think, if I'm looking at this trade, I'm satisfied with the entry. Perhaps the stop loss was not placed at an optimal point. You could say that was just placed at another support level. So that may have been a mistake of mine in this trade. Basically, so you can see how this may have been a support level based on, or it may have been a resistance level based on this price action here. However, you can see this red is also a resistance level. Based on here, here. So I might actually try shorting this pair again. We'll see though. Now we have a little bit of a pattern of higher lows. In any event, the trade did not work out. Something to think about and to improve my stop loss placement on. And that gives me, I think I've had 5 trades that have closed in January of 2014. Only one has been a winner, so I'm down a little less than 1%, I believe, at this time. So definitely still manageable, although of course a losing streak is never that much fun. But there is the idea that losses make us psychologically stronger. So, and winning can make us psychologically lazy. So hopefully this is just a part of my ongoing progress as a trader. Okay, let's start with the euro currency pairs. We'll go to euro dollar. Here is interesting, and this is, I talked about how dollar Swiss and euro dollar often have the same sort of price action. Basically, if you trade one, you sort of don't need to trade the other. I'm going to delete the lines we have here. I'm going to start fresh, a fresh perspective. Okay. So we have our prices now between the 50 and 200, 50 simple moving average and 200 exponential moving average, which is something I often view as a bit of a choppy market. But we still have, as those trend lines illustrate, you can still see. And I think trend lines are a bit more important. Okay, so that is that is basically the support level. Let's change the color on that. That is the support level that I think is worth watching. That's based on this here, as well as this range right here. So if price can fall to this support level, perhaps I'll be interested in going long. We'll see. Let's see how long it takes to get there. So at this point, nothing on euro dollar. Euro Australian dollar. Yeah, still waiting for the pullback. We've seen this with Euro Australian dollar. Probably going to be the same thing with the Euro Canadian dollar. We've talked about this basically every day. We've looked at these currency pairs. Right. So, you see the trend is clear. Price is above the 50 simple moving average and the 200 exponential average on both these pairs. So that tells us what direction we want to be trading with the trend. At least in the approach I use, trade with the trend. However, we need it for it to pull back. So if we can pull back to the 50 simple moving average, that's something of interest. Let's actually draw a trend line here. There may actually be an opportunity to draw a channel. Let's start it from here. Okay, so you could argue it's not the best of channels, maybe. That's a pretty good channel, actually. So we've broken out to the upside here. Price may be testing this and may go from here, and we may not get much of a pullback at all. A pullback to here would be great. Let's see, plot another level, horizontal line. Based on how this trend line, how this channel is, if we can get a pullback here, that puts us at the bottom or lower half of the trend line. We're at a major support level, as as established here and here back in October of 2013. But we'll see. In any event, the point is with Euro Canada, we still need more of a pullback. Okay, Euro Pound. Yep, same story. Euro's just been well, against the pound, it's been falling in value. I haven't had much of a pullback. Where did I short it? Here, somewhere around here, and I got out, I think, around here. So it wasn't a great trade. I should have held on to it a bit longer in hindsight. But in any event, now we need more of a pullback before we can get in. Euro Yen. Okay. Same situation. We're now at the 50 simple moving average, but really I would like to see it fall all the way down to 134.85. Otherwise, it's me. I would regard it as a bit of chasing. I really need a good pullback, and that pullback may not come. So we may need to see basically any point where support is really being established. Euro New Zealand. Okay. Now this is interesting because we are definitely at a support level. Price is below it's still a little choppy to me. The trend is not really that clear. So this is another pair I would pass on. Yeah, it is. If it can fall to the blue line, that might be interesting level to buy at. But at its current spot, I just think it's a little choppy. Anytime I draw that box, it's usually an indication that I'm seeing it as a range rather than a trend, and that's sort of confirmed a little bit with price being below the 50 and 200 exponential moving average in a situation where the 50 is not closer than the 200 to price. So that's not always something that I'll pay strict attention to, but it's something to notice. Ideal trend is the 50 is closer to the current price than the 200 exponential, and we don't see that here. Okay, so I'm going to pass on this on grounds of it being choppy, although I will mention that if it falls to this level here, which is 60.87, and we're about 280 pips away from there, 270 pips, that may be interesting. But until then, I think I will wait. Okay. And that's it for the euro-dollar pairs that I look at. Now let's go on to the pound. This process can be a little tedious for many. I sort of enjoy it. That might just be from doing it for so long. This is a good trading method for me, and Stephen Primo, we have a course from him on InformedTrades.com. He likes to say good trading is boring. I tend to agree with that. It's a lot of people come to the markets for excitement. If you come to the markets, you may get excitement, but you may not make money. So it's a question of asking what you're here to do. Good trading is really a risk-averse type of process. Okay, pound Australian dollar. We saw the same thing with euro Australian dollar. Still just waiting for that pullback. The trend is clear. Just need that pullback. Pound Canada, probably the same thing. Yep. So really strong trend here. And the ideal situation is to get in on these pullbacks. This pullback would have been interesting, and then try to ride it as long as you can. That's sort of what I've been trying to do with my strategy. Still have a ways to go in terms of making it better. Pound Swiss. Yeah, same. Pound has really been on a run. We've had verbal intervention from the Bank of England. That hasn't seemed to have much of an effect. Pound is still running away with it. I do think, and I mentioned this on InformedTrades, that the pound is the next yen. The yen is has really started declining. It was rallying forever, and then all of a sudden it reversed, and now it's in a declining situation. I think the same thing's going to happen with the pound. It's been rallying strongly. Once that's done, though, I expect to give back all these gains and then some. The fundamentals of the British economy are pretty bad. There's a lot of weakness there, mainly due to debt and the trade situation. Okay, that was pound Swiss. Now it's time to look at pound yen. Yeah, still need more of a pullback. You can see that. The same thing we saw with euro yen. So it's really, you're going to see a lot of similarities across these pairs. Pound kiwi, this will probably be in a range too, like we saw with euro kiwi. Yeah, and it is. Um, so I would like to see. I'm a little more confident that this is a bullish trend. However, I would still like to see more of a pullback or a break out of this trend. Pound US dollar. Okay. Yeah, still need that pullback. Other than that, nothing much. Waiting for that pullback. How far away are we? Are about 180 pips away from that black line there. And that's really, it was established as a support level here, or established as resistance here, 1, 2, and then it becomes a support level here. So we have a little bit of history at that price level. I like to enter at levels that have sort of established themselves as places where price tends to reverse. Okay, so nothing so far. Let's go to the dollar pairs. Dollar Canada still running away. We saw this with Euro Canada, Pound Canada. So, no point to even think about until it starts even heading down and giving us a little bit of a pullback. I did mention though that it didn't actually work. I mentioned this yesterday too. We had some potential setups for counter trend traders. It turns out if they had entered, it wouldn't have worked. That's one of the reasons I'd like to still trade with the trend. But it is interesting to look at. In the light of this price action, something that goes up this quickly often comes down just as fast, if not faster. So there will be an opportunity, and I'm sure for the traders out there with the right approach, there's going to be a great short opportunity coming. Okay, dollar Swiss. Yeah, well, this is where I got stopped out on. Let's just delete these lines. I've learned the stop loss placement was probably not that great. Probably a poor decision there. I may have been a little bit eager to get that trade in, and I paid the price for it. So let's just learn that lesson and operate from a clean slate. Let's draw a potential entry line. The first level it sticks out is this one right here. So yeah, I clearly should have waited for price, especially with the 200 exponential moving average. Let's see. Right now we have a pretty big green candle. But if price can reach this level, established here, here, I may be interested in shorting it from there. We'll see. But at this point, nothing. Still gonna wait and acknowledge the error I made on that one. And dollar Singapore, this is probably still just going up and not giving us a pullback. Yeah, and that happens, So I tried to enter here, right? So I had a number of orders that didn't get filled. Dollar Singapore was one of them. I had put some entry orders. This black line was where I really wanted to enter, but we didn't get enough of a pullback. So that's fine. We'll see when it starts to turn where it pulls back to, and reevaluate it from there. Well, that's it for the dollar pairs. Now let's go to Canada. Canada Swiss. Okay, still declining. Excuse me. Canada Swiss still declining. If we can get more of a pullback to 85.20, we have a ways to go there. Still at about 220 pips. This would be the first level that I would be looking to enter at. And I did have an entry order on here, but it didn't get filled. Unfortunately, it would have been a great trade, clearly, and very easy, no real pullback. But that's the way the situation went. So we'll see if it gives us another pullback. Of course, we have to take what the market gives us and not try to be too demanding. We have to change how we respond to the market rather than demanding that it respond to us. Canada Yen. Okay. This is another one that looks a little range bound to me. Yeah, we'll see if it can fall to 93.74, the level I have spotted there. And I'll reevaluate the situation there. It may be a potential opportunity to trade that range. I have something similar with Aussie Yen, which I entered yesterday on. We'll get to that when we review the Australian dollar pairs. I entered an order, it has not gotten filled yet. Okay. So that does it for Canada and Australian dollar. Aussie Canada, another order that didn't get filled for me. The Australian dollar is always the most painful for me to look at this in this week at least for the morning series because I knew this move was coming. I just didn't get the orders filled, so that's really unfortunate. Of course, I don't, as I mentioned before in other videos this week, yesterday, I don't think I did anything incorrect here. I think it's just a bad. I would have entered the same way on this one. I saw this candle, would have put my entry order here. The market just didn't pull back again. So that's the way it is. I don't think I'm satisfied with my trading tactics there, even though it didn't get filled. Aussie Swiss. Okay. Now this is another pair where I still have this entry order pending. And price is reversing here. So yeah, I see no reason to, let me just change the color of these lines. I see no reason really to change things. The one change I might make, and this may be a lesson I learned from even that in this situation, I don't think so stop loss placement is always a key consideration of mine. The further out you put your stop, the smaller the position has to be. And in order to maintain reward risk, the further away your target profit has to be, and thus the longer time it's going to take. So that's something that, in general, from that perspective, I don't want my stop to be too far out because it's just going to, the position's too small. It's going to take forever to hit a profit if it does. So your money is just tied up in that trade. Instead, I like to think of at what point is the trade proven wrong. So that's one way of looking at it. Another thing is if I plot out two support levels, I'll put my stop between those support levels. In this particular instance, this red line here, I think could be made, you could argue it is a resistance level, and that's based on the price action we saw here, here, and even here a little bit. However, with this candle, I don't want to put so if this is a resistance level and this is a resistance level, I could say enter at this one and put my stop loss right here. However, I don't think with these wicks, this one here and this one here, I think it's too close. So we have two close resistance levels here. In this scenario, especially since we have this candle, what I'm really speculating upon is that this resistance level is going to be honored, especially with a 50 simple moving average right here. That may act as an additional support. Let's actually draw Fibonacci here. Surprised I didn't do that earlier. We'll go from this down to here. Okay, so from a Fibonacci perspective, this is interesting. Perhaps I should, wait for an enter at the red line. Okay, I think what I'm going to do now is, let's see what the candlesticks say. So I'm actually going to go ahead and cancel my Aussie Swiss position. I'll keep these lines on here for now. I'll remove the target profit, and I'll make them dashed and black. Um, yeah, so, and this will be just some levels to watch. No order is placed here. Okay, so these are levels to watch just to get an idea of, and let's see how candlesticks behave at this level, at these levels. Okay, so that's it for Aussie Swiss. That's the one trade decision I'll be making so far, is just canceling that order. Okay, let's move on to the next pair. Aussie Yen. Okay. So I did put an entry order on this yesterday. It has not gotten filled yet. Let's see if it does. But from this perspective, I'm just gonna wait. And yeah, nothing to do really here just yet. Aussie Kiwi. We may have a base forming here, and that may give us the cue to rally. However, it needs to go all the way up here before I can consider shorting. Shorting, I mean, the trend is definitely downwards, so that shorting is what I would like to do. Let's see if we can pull back to 109.08 to give us the entry order, to give us the setup. That I would like. And Aussie US dollar, same situation. So Australian dollar just needs to rally a bit. This was still laughing at. I knew it was going to decline this week. I had the orders placed, they just didn't get filled. Aussie US dollar was another one, right? So here, as soon as this red candle came in, I put in the entry order, just didn't get a pullback. So that's the way it goes. That's what happens. Generally, I like to see a trading range, and so you often will get that pullback. We have a course on Wyckoffing supply and demand that talks about trading ranges and the consolidation that comes after the market moves, and that's a good time to enter. You enter on that consolidation, you make your money when the market moves and trends. At least that is the idea. Okay, that's Aussie US. That wraps up the Australian dollar. Now let's go to New Zealand dollar. New Zealand Canada. Yeah, still need much more of a pullback. This has really rallied, right? Canadian dollar has lost a lot of value over the past couple weeks. You can see that on basically against every currency. However, so in any event, the trend is clearly up here, but we need that pullback. That's been a recurring theme. Maybe it'll come. Let's see. In any event, so just for now, we just have to wait. Kiwi Swiss. Yeah, still in that range. So let's see if we can get to the top of the range. This may be an interesting short setup, but I don't see a long at this time. Or I don't really see much of anything, as we're still in that middle territory in a range. So normally I like to trade the range, although if I'm confident in drawing that box, that purple box, I will trade the range of it. From if price reaches the bottom, I'll buy and sell at the top, and vice versa. New Zealand yen. Yeah. Still need more of a pullback. Seeing this with a lot of pairs. We are at the bottom of that price channel, or near the bottom of that price channel, which is also a resistance level. That's what the gray line here signifies. However, I just would like more of a pullback. I really don't think this is enough. I would like to see it go to at least a 50 simple moving average. 50% Fibonacci, and I mentioned this before, 50% Fibonacci is what I like to enter on. And sometimes I'll make exceptions. In this scenario, I could definitely enter on at 84, 86 rather than at 84 where the Fibonacci level is, just because we have a major support level there that's established, and we also have the 50 simple moving average there. However, this is not enough of a pullback for me to enter on. So pass on Kiwi Yen, although the trend is clear, and Kiwi dollar still in that range, clearly in the trading range. Let's see if we can get to the bottom or top of that, and we can trade that accordingly. So that's about it for all the currency pairs. No trades today placed. The only thing I did was cancel my Aussie Swiss order. And that's okay. If the market doesn't give you a setup you like, definitely good to pass. Remember, if you trade and it doesn't, if you force a trade and it doesn't work out, you're going to lose money. If you don't trade, you're not going to lose money, or at least not going to lose money in the market. So really, it's good to wait for the setups that you like, that you're comfortable with, that fit your strategy and fit your plan. That's about it. Any questions you have, anything you want to add, join us at InformedTrades.com. Thanks. Best of luck in your trading.